Happy Friday, traders. It is 8:01 a.m. Chicago time on the 17th of April. Happy Friday, traders. It is 8:01 a.m. Uh, on the 17th of April, 2020. Thanks for joining me. This is episode number 1,736. Derivatives trading is not suitable for all investors. Past performance, not necessarily indicative of future results. Hopefully, I'm coming through nice and clear to you. This morning, we have a big gap up in equities, strong markets overnight. The gap really is the result of news out of Gilead here that they've tested a potential treatment for for COVID-19 that showed that even the severest of cases are able to recover in a week. Of course, there are some issues with this study, so I'm not sure what to expect. Is this gap going to get filled or not? Is this information going to be refuted or argued against? Not sure, but the study was commissioned by Gilead, done by Gilead's people, and there isn't a peer review yet. So there's potential issue with what they've done. Also, apparently the sample size is very small. So we'll see, but it's really good. Really outstanding, and it provides some measure of support for opening up the economy and sending people back to work sooner if there's a treatment. The biggest things the three biggest things that can get us going again are uh, easy testing, quick testing, so we know who's sick, who needs to stay home, and who doesn't. An at-home kit would be great. The second is a treatment, an effective treatment, whereby if we are infected, we can just go in. It's just another flu. We can go in and get a treatment. The third is a vaccine. And this, the testing hasn't caught up yet, despite all claims. But here a treatment is really the second best thing. In any case, the market liked that news. We popped higher and pushed to 2885 in the S&Ps, filling almost completely filling the gap left behind a while ago from a couple weeks ago, and we've been trading sideways since. We have been completely balanced overnight. I'll go over that in a minute. The market is allocating to risk this morning with the Russell being limit up the entire session. The market, the Russell reopened and slammed against its limit up price and has been stuck there ever since. The limit up in the S&Ps is 29.29. 29.29 is a 5% Globex limit up. We did not get there, so I didn't post it. We weren't close, and we've been sitting sideways ever since. We're above last week's high in the S&Ps and so on. So, the leader is the Russell, followed by the DAX. The DAX is up 314 points, 3.04%. The Dow's up 685 points, was higher even on decent volume. The Euro stock's up 2.87%. The S&P's up 71.5 points, or 2.5% on decent volume, 472,000. The Nasdaq's up 145 points, or 1.66%. Crude, which has rolled to June. You should be trading June crude now, and because it has rolled to June, there's a premium. There's an outstanding premium in crude of about $5.66 based on settlement. Very, very high premium in crude, $5.66 or 28.5% against the May settlement price. Is a big gap there in the contracts between May and June. In any case, you should be looking at crude at crude, June crude now, which is trading at 24.84. Again, it's down 2.7% on decent volume. Let's switch gears and take a look at what's ahead today in terms of higher impact releases. Looking at two-star impact or better, there's really not much construction output, core inflation, and inflation out of the Eurozone came out. Construction output missed by 2%. It was expected at 1.1, came in at negative 0.9. Inflation's in line and core inflation's in line, and that is it. There's nothing else on the calendar for today. Let's switch over to our review segment. Yesterday, the primary scenario, we were looking at opening right on the edge of Wednesday's high. And what I had expected is a push down into 2776 or so. And that area there, the 2780, 2776, is the MC point of control. Expected some stability, and I looked for a push on the overnight high. That did not happen at all. In fact, all three scenarios were incorrect. We did dip down, but scenario 3 was closest, but we did not break we did not break the overnight high early. Here's what happened. We opened a little bit higher, 2788, and then pushed to 2795, rolled over, and dropped into this 2780, 2776, and then of course I talked about 2774, which was the prior day's close and the low volume node, or the split between the upper and lower distribution. If you remember, yesterday the overnight profile showed a clear double distribution. I said that if it held this 2774, then it's likely to bounce back up, push through the overnight high, and continue higher. It did not do that. It instead dropped and almost tested the prior day's low, 2751. It held 2754.75. Then it had this, so we had an impulse again, pull back to mid. There's the mid. Remember the blue line, not the cyan. The blue line is the mid. Impulse down, pull back to mid for continuation. This is the kind of trade we look for. Then we had another impulse with a small continuation, comes back to the mid area, does not quite get there, has a nice little rotation down of about 9 points or so, 8 or 9 points, and then breaks through the mid and tests all the way up to the IB high, pulls back again and breaks the IB high. And then immediately afterwards, we're struggling to get to 2800 here, which is right there. Immediately afterwards, we get this big impulse down. So now we're looking for a continuation and a neutral day down. Does not do that. Misses the IB low by 2 ticks. It migrates across the entire range, almost 50 points, 42 points. Migrates through the entire range and misses the low by 2 ticks, only to walk itself back to the mid again, a higher low, and then now we impulse up mid of the rotation, and then we just continue higher to break the high again, to push the high again. Yesterday was quite a confusing trade, although I felt that it was it telegraphed pretty well in terms of the price action and the rotations. It telegraphed pretty well, but in terms of answering what is it trying to do, it really was all over the place. Yesterday's profile shows price discovery active across the entire range, somewhat balanced day, with the value area migrating higher. We could see value moving up and the point of control moving higher right here. The market is basically skewing to the upside, and now we have left the 50%, the mid of the entire swing down behind us, below us, with this gap up. Then we come into today, and what do we have? We have a market that reopens and immediately pushes up. And then we run into the close from 4 till 5 Chicago time, 5 till 6 Eastern time, and we open back up to find ourselves gapping up. This is just a huge torpedo for anybody who's short. For anybody who's short futures, short calls, and so on. And since then, it has completely gone sideways. I mean, essentially, the overnight range was 2850 to 2885, which is pretty decent range. It's nothing to sneeze at. It's 35 points, but completely balanced. Essentially, the market absorbed and repriced for this Gilead news and the prospect of reopening the economy sooner, and has gone completely sideways even through the European session. Generally, the Europeans come in right here and move us around a little bit. And you could see there was a pop and a drop, but overall, it stayed contained. We stayed contained inside of the initial balance of the European session, which is quite unusual for us to hold that initial balance of the European session throughout the extended trading hours into the open. So we are below it now, but again, we have a completely balanced profile. The point of control is very, very clear here. We have the VWAP right on top of the point of control. Mid is in the gap, but the mid, of course, represents everything from the reopen all the way through. If I took it from the beginning of the session at 5 Central, 6 Eastern, then the mid would actually be right on top of the VPOC as well. This is a very unusual configuration, but what we have here is essentially a P-shaped profile, which is a short liquidation profile and a short squeeze profile, and that's what we have for the session. So this causes a fair amount of uncertainties here. I'm going to take you to the bigger picture. Take a look at the bigger picture. I'm going to remove this composite, this micro composite right here, just to clear things up. But you can see where we are. We're pushing up against the 50 SMA on the composite chart. This is not the SPX. This is a roll adjusted day session only futures chart of the S&P minis, and it is 1 bar per day. And what we're doing is we are above the high we recently put in, and we squeezed all the way to 2885, which is somewhere in here. And we're holding steady here at the 50 SMA, and so it gives us this. We do have a gap. It's a substantial gap this morning from yesterday's action, which had a high down here. But overall, we have gap rules today. Gap rules today. If we are responsive today, we're going to see some longs getting squeezed and longs liquidating fairly rapidly into yesterday's range. Looking at the order flow is pretty straightforward this morning. We have, the big push up. There it is. So we reopen and pop, 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 pop. You can see the lifting was pretty strong right into this big 2820 collision. We have a big collision here. There was quite a bit of volume there, and you can see that volume has come back. It's still bid below. It was offered yesterday. Now it's bid below. Before we stalled and closed right here at 4 o'clock my time, Chicago time. We open at 5 o'clock Chicago time, and we immediately become responsive, and then we push away from the gap. And we've been holding the gap all night. Volume coming in at 2880 after the high was put in, 2885 after the high has been put in. So those are suspect when they come in after the price has been tested. And when we look above, let's squeeze in a little bit. When we look above, we have a lot of liquidity at 2,900, as we would always expect. 2,890, 2,900, but below us, there's really not all that much. 2,830, 2,820, and 2,825. Those are strike prices on the futures. Those are the only areas with some color on the bid, but the offer is nice and bright. And it's hard for me, given the configuration we're at and the context coming into today, it's hard for me to tell what it wants to do. So today is going to be one of those keep an open mind type of openings and wait for the market to say what it wants to do. So that's what we're looking for. I want to take a moment and just remind you again that I did launch EdgeClear. It is a futures brokerage. I've done this before with another venture that unfortunately took a turn, but myself and the brokers from that other venture are part of EdgeClear now. I'm the full owner of this entity, and we are launching with a 98-cent round turn rate for the micros, including your platform, including Rhythmic, which I believe is the best data feed out there for trading. It's what you're seeing when you're looking at my book map in the full depth. You're looking at Rhythmic. It says it right down here. See, Rhythmic R plus. Okay, so I'm looking at the full depth. You'll get the full depth of market. You can go out as far as you need to for order flow trading, for scalping, and for anyone entering a trade and wants to see what liquidity is there. This is the platform to be on. The 98-cent rate is the lowest that I'm aware of without strings attached. Others require a $10,000 deposit and some other things. But this is all in, and it's a deal for now. You can find this deal at edgeclear.com. I would appreciate your support. The goal with this brokerage is to then fund some technology, some tools for traders to help you take control of your vices and issues, and to provide some risk control, better risk control than I believe, or in my opinion, is available on the market currently from any trader, any broker that's catering to online traders. With my prop experience, and these experienced award-winning brokers, I think we have a strong team, and I'd love for you to join. Okay. I also want to remind you that it is Like Friday. Please hit the like button. Please hit the like button and show your support. And then finally, let's get into what's expected for today. Okay, for today, so we're opening in a gap. We're up against this 2850 area, very important area right here. We're opening in a gap. I'm looking for an open auction. I'm looking for it to actually fight on both sides of this, and I'm expecting that it'll attempt to push higher. I'm looking for a push into 2863.65, consolidate. I'm looking for it to roll over. This is a news-based event. I'm looking for not quite the SOC, because the SOC in this case would be the 27, the close of yesterday, which was 2787. But I'm looking for it to kind of drop through, and for the news to be absorbed, and for anybody who's long coming in to hit the bid, looking to secure some profits. So an attempt higher. So here's how I'm going to look to trade it. The way I'm looking to trade it is when it opens, I'm going to watch my volume scope chart. And what I'm looking for is a pattern where the market starts to move up, but I don't want it to move up thin like this. What I'm looking for is for it to move up, and I'll try to draw the shape of what I'm looking for. As it opens up, I'm looking for the shape of the footprint to be thin and then to get thick at the top, right? To get thick at the top like this. um, as you're seeing in this bar here. And what this shows is that as the market is climbing, as the market's pushing higher, as the market's pushing higher, in general, in general, what you have is absorption, right? The only reason volume exists, like you see here on the footprint, this is a kind of a crash course in reading the footprint the way I'm seeing it. As the market moves higher and it gets thick, like we see here, a lot of volume starts coming in. What you have is absorption. That is resistance coming in and squeeze. And as the buyers are lifting, there's size there, usually some sort of an iceberg, and it's hitting, and then the next thing you'll likely see is the market rolling over. And that's what I'm looking for on scenario one. As it pushes up, I'm looking for that kind of resistance. If we don't see it, then it's likely to push through the overnight point of control at 63 and squeeze to 28.85 for the overnight statistic. But that's what I'm looking for. I'm looking for it to push higher and for a lot of trading to take place, collisions on Bookmap, and I'm looking for that rotation down. So open, auction, squeeze higher, consolidate, have a difficult time up here, and then start to roll over. And if it does, I'm looking for it to come down into this 28.35 area and then target 28.20 as the key spot for it to settle into Friday. Again, we're going into the weekend here. It's not a long weekend or anything special. I'm not expecting anything special, but if it does roll over, that's what I'm looking for. It's quite a bit of range, but it's selling range on a gap up on news. The other scenario is an open auction that pulls back into the 28.35-40 area, consolidates, and then we have the impulse up pushing into the overnight point of control, and then we are holding sideways at 28.70 to consolidate and potentially squeeze higher. The range of the overnight session, including the low after the open, which is basically yesterday's close, all the way down here. So the overnight stat has a lot of area to cover. The overnight stat has 100 points to cover, 97 points essentially, and that's quite a bit. So I don't know about the overnight stat making its way, but the scenario two has that ability. With a gap this big, the probability of a gap fill is quite small. In that situation, I'm looking for scenario three because we have a gap. I'm looking for scenario three, a push down, an impulse higher on an open test drive, consolidate at the overnight point of control, and then squeeze that 28.85 into the century figure, and we're back to 2,900, folks. Believe it or not, we were in the 2100s just a couple of weeks ago, and here we are near the 2,900s. So those are the three main scenarios. This is what I'm looking at for today. Remember, going into this weekend, do not burn a hole in your pocket. It's not worth defending. There isn't one trade in your career that's worth defending, unless you're in an option where you can spread the position, or you can correct the position. You can turn it into an iron condor or a butterfly or something in an outright futures trade. There is never a reason to defend a trade. We are not loyal to our trades when they don't work. Okay, so this is really important to remember. If it's not working, let it go, because you're moving on to the next. You're moving on to the next trade in the direction of the flow. We are surfers here, people. We surf the markets. We don't make the waves. We simply surf the markets. So this is what we're looking at. Good luck today, and I'll catch you on Monday bright and early, and hopefully rested. Take care.